How's it going, fellow traders? Magic Trader here, and this is the CFTC report for June 4, 2019. This is the date that the institutions recorded these positions here. And so let's start by taking a look at gold. Alright, so we received a big move up from that weekly ascending trend line with this candle here, and that was caused by the institutions increasing their long positions from 194,000 to 240, and it was also caused by them closing short positions, reducing them from 107,000 to 84,000 positions. Alright, that's a massive increase in net positions from a positive 86,000 to a positive 156,000. Alright, so we've since received another move upwards, and we can safely assume that it was probably caused by more buying by the institutions. But I want you to take a look at the coloration of the cells here. Okay, we used to be bearish, now we are neutral. Alright, we are not bullish just yet. Alright, the COT data is telling us that we shouldn't be bullish, and the technical charts are telling us also that we shouldn't be bullish, and there's a very specific reason why. Alright, I won't go into too much detail in this video, but the Forex Market Outlook video, you'll be able to read what or watch what I'm looking at in the charts, and you can read in the report the full details of what we should be looking for in regards to gold being bullish. But the bottom line is, we look at the sentiment here and we can see that it's neutral. So let's move on to the next one. Oil. What do we see here? We see more profit taking on those long positions, and now they are increasing their shorts, and that came as price was dropping down like that. So more profit taking on longs, which is exactly what we've been saying should be taking place, and look, it's been taking place ever since back here. Profit taking on longs, and we're expecting price to rally up at some point because we're still very much bullish. Okay, yes, they've dropped from 87 long exposure to 80%, but we are still expecting it to continue getting less. Alright, now we go over to the US dollar. They close some longs, close some shorts. Net effect is long exposure jumps up 1 point, and this happens with this candle here consolidating right before the push lower. So you take a look at net positions, they have slightly declined. We used to be very bullish back here, became a little bit neutral, bullish again, and that's March, and March is up in here, and now we're starting to get less bullish again. But if you take a look at the coloration, it's still somewhat between blue and green, so it's almost like we shouldn't be doing anything right now. Okay, it's the best bet because we got the momentum to the downside heading towards the weekly ascending trend line, and there's a couple things that really could play out here on the charts. So we are waiting to re-engage in this chart. We're not making any moves just yet. But you take a look at the Aussie, what do we see? They're closing longs, and they've also profit taking on shorts. Now, wasn't I saying this a few weeks ago that we're going to likely see profit taking on shorts because they were so aggressive with their short positions, and we were sitting within a weekly area of demand? So I told you profit taking on shorts would cause price to rally, and that's exactly what took place here. But this data represents this consolidation candle. So they consolidated and removed some of their short positions for profit taking. I believe we're going to get a higher push upwards because just by looking at the technicals, there's a clear path for a move up like that. Next we have the US CAD, and we see an increase in longs from 55 to 57,000, and that's pretty much it. So long exposure jumps up 1 point, but this came as price was just consolidating right before the drop. So very bullish here, not so much here, somewhat here. They're very exposed on the long side. So likely profit taking is what's going to take place, and probably has started to take place last week. We don't see it in the data yet until this week's data. But that test of that trend line now being penetrated, we could see a bigger drop like this on the monthly chart. Okay, more like that. Just because of the overexposure to the long side. And we've been seeing this theme throughout all the dollar pairs. And I think it's something that we really got to be careful with, because over the next couple weeks, things are going to happen on the charts that are going to make it very clear whether or not we're going to see some big moves this year or a continuation of the bigger trends that we've been watching. Okay, so we'll be keeping our eye on the data. US Swiss franc, they were very heavily long. They took profits on them. Shorts have very cooled off, but we still got very big overexposure on the long side, and that came as price was just about to break through that weekly area of supply. So that's the move downwards. We were expecting this move downwards on the dollar pairs. They're all taking place. Again, lots of things happening on this monthly chart, which leads me to believe that there's a good possibility we see a bigger decline. Alright, so we'll be watching that to see if that is what's going to take place. Bottom line is very aggressively long. They're taking profits. These numbers should drop in order for me to get comfortable to get into a long position again. Euro US dollar, we take a look here and we see an increase in longs and a decrease in shorts, and that came as price was consolidating, right, in preparation for the big move to the upside. So right now we see the overexposure 61%. It's slightly bearish, but not very bearish. Okay, that means we should hold off on any positions right now, because this is a big move that took place this week. All right, this big candle this past week, that was a big move, and we're going to be in the community watching for very specific signals on this chart to see whether or not the institutions are going to take it upwards like this, or if they're going to continue downwards. So it's too early to speculate right now what's going to happen, but there are very clear signs that we're watching for, and once they present themselves, we'll know how to manage these trades that we have on this pair, and we'll also know how to take advantage of any future moves that are going to come. All right, now we go to the pound. They closed off some longs and they added shorts. That was as price was dropping down into the secondary weekly area of demand. So bottom line is shorts are aggressive. We're expecting some profit taking on those shorts, which is going to cause price to rally up like that. All right, you see here increase in short exposure to 68, and that's mainly due to the increase in shorts and decrease in long positions. Big jump, and I sensed we're going to see more closure of short positions, which will cause this move upwards, and then eventually a reaccumulation of those shorts for a bigger push downwards. US dollar Japanese yen, expecting more downside here. We were overexposed with the longs, so they took profits, causing price to drop. And so shorts are cooled off. You don't see them really accumulating a strong short. It's been more about profit taking on long positions. So we're expecting a rally up like this at some point, and then a further move. The rally up may not happen. It's a possibility of it happening because we're dealing with momentum right now. The momentum was to the downside. It has since stopped. We are expecting it to rally up, and if it does, good shorting opportunities will be coming our way. Now we look at the Kiwi dollar and we see slight decline, increase in shorts. That came down here, but bottom line is shorts are very aggressive. We're expecting some profit taking, and I think it's already begun, because we now see that move to the upside that we were expecting, and we also see an increase in short exposure. So profit taking on shorts is going to fuel a push to the upside, and then eventually they will reaccumulate a bigger short position for a push to the downside. And there you have it. That's your CFTC report for the data recorded on June 4th, 2019. Thanks, and take care.